Ladies and gentlemen, welcome to another episode of your crypto market update. Today is December 19th, 2024, and I come to you from the underground bunker safely nestled in the Kraken cryptocurrency studios, where we are safe from the red candles. We're safe from the liquidations. We are safe from the mortars and bombshells that are currently going off across the crypto landscape, as yet again hundreds of millions of dollars have been wiped off the board in liquidations. Exchanges are certainly happy. I hope you're being safe out there, because we are seeing some volatile price action. All of this coming, of course, following yesterday's quite hawkish to some FOMC announcement and rate cut by Jerome Powell and the Federal Reserve Board. I'll have lots to talk about that here in just a little bit. Felipe, welcome to supporter, man. Thank you so much for supporting the channel. I've been seeing you in here regularly, and it's good to see your support, man. Thank you so much. We have such a good show for you guys today. We're going to be covering the macro. We're going to be covering overall altcoin strength relative to Bitcoin. And we're going to be looking at, if we are going to continue dipping a little bit, where do we want to consider loading the truck up? All right. If we have now lost kind of our daily momentum levels, all right, and we are going to get a little bit of a correction, although I'm not 100% certain on that, and we'll get to that here in just a little bit. Where would be our optimum reentry levels? We'll also look at today. Is today going to be a good buying opportunity for the short or medium term? We're going to look at Bitcoin. Yet another pullback, right back to levels that haven't been seen since, I don't know, 5 days ago, or the beginning of a deeper correction. We'll cover all of that and more. But first, let's talk a little bit about, before we begin, let's just talk a little bit about, for those of you who don't have a deep experience with economics or these rate cut decisions, exactly why yesterday was considered hawkish. And kind of let's start there, of course, for the very new. Hawkish is going to be, of course, we use this term in politics to refer to warmongering, or like we need to be harsh or stern on a particular stance or policy or situation. And it applies to economics, and we use it kind of interchangeably for just when the Fed or significant, financial institutions, pretty much we just use it for the Fed and Jerome Powell in practice, when he comes out and doesn't seem very confident about the future, or is implying that further monetary restrictions are necessary, or in some way, shape, or form that not everything is just rosy, keen, and peaches. Dovish, on the other hand, is the exact opposite of that. Oh, everything's great. We see nothing but growth. Sky's the limit. Blue sky breakouts. Green candles inbound. Blah, 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 blah. Right? And those are often, of course, associated with, recently, over the last decade or so, the process of monetary easing or monetary tightening. You guys will know that, of course, we had a beautiful 2020, 2021, not only cryptocurrency rally, but stock market rally, largely driven off the idea of money printer go burr. So this was a period of extreme monetary easing when the Fed was injecting large amounts of capital into the markets to kind of combat the situation of COVID-19. Which, we can see has had some weird results, so to speak. Ironic that if you shut down a country, the economy goes to pot. Interesting. However, yesterday in particular was quite interesting, because while we did get some good things, of course, a rate cut decision, the market did not, and I don't think this is the main thing, but the key narrative that you're going to hear out there is that the market did not like the revision or the lowered expectation, even though this wasn't explicitly stated. But the Board of Governors is considering only 2 rate cuts in 2025, as opposed to what we had kind of previously been led to believe, that we would be potentially experiencing 3 rate cuts, with the expectation that we would be experiencing yet another very short-term rate cut yet again in January for perhaps another 25 basis points. Now, this doesn't in actuality mean a single thing, because if I've learned one thing over the last 10 years in the markets, it's that the Fed has no idea what, I don't want to say this because I'll say this and it'll sound controversial, and it is controversial. It's not that the Fed doesn't know anything, all right? They are highly intelligent. They have their own school of monetary thought, of economic policy, of how they feel the Fed should operate. But I'm always remembered of Milton Friedman, perhaps the last great economic thinker of our time, who said quite jokingly, that, and so I'm paraphrasing here, but essentially he's giving a lecture on the financial or the Great Depression and how the common narrative is that it was a failure of private business. And he goes out to lay out quite clearly how it was a failure of government, because we have to understand that the Federal Reserve is an arm of the federal government. All right. Even though, they're independent, president doesn't control, they're administrative, they're an administrative agency. All right. They are the government. All right. And if we've learned one thing about the government, is the government's usually pretty bad at command and control economies. So I do want to state this before I get deeply into this. It's not as if I want you guys to have the right opinion about the Fed, okay? Your opinion about the Fed should be probably similar to your opinion about the Department of Education, and that it's relatively ineffective. They are not puppet masters controlling the global economy with puppet strings. They're not. And I know that we can be A, led to believe that, and B, sometimes despondently feel that way based on an overall sense of powerlessness and lack of representation. But it's not the case. It's objectively not the case. While they do exert a lot of influence, they don't exert a lot of direct control over the economy. A lot of their power is soft. It's their ability to instill confidence in the markets, confidence in foreign or domestic investments, or to the contrary, to signal caution and restraint, which often is interpreted as hawkish. So it's not as if they are able to just smash their grubby little hands into the market and twist and control it and contort it to their desire. It's not the case. The market is in control, which is probably one of the most liberating and empowering ideas and realities on the world today. The largest economy in the world, the largest market in the world, the people, the free market, the private citizens, the companies, they are in control, not the government. We are in control of the market. That's very empowering. And it takes a while to wrap your head around that. But it's one of the most inspiring and liberating things once you come to accept that that is the case. The Fed is responsive. They're not very good at being... Anyways. So, with that being said, so yesterday, we of course did get the rate cut. The rate cut happened. Now, with regards to only getting 2 rate cuts in January, I don't believe that whatsoever. All right. Powell was very clear, not only in his sayings or what he didn't say, that basically they have no idea. All right. They're willing to change that kind of at any moment's notice. And it's going to be very interesting what's going to happen once we get a kind of bullying president like Trump on January 20th to see how belligerent he is towards the Fed with monetary policy. So far, he's walked back his initial claim of, well, I'm going to fire Jerome Powell. But, that was the first shot fired. You know what I mean? It's first shot fired. So we shall see. But going back to the statement from Milton Friedman made this comment where he's like, if you, for your sins like I have, had to read basically the last 50 years of the Federal Reserve's annual report, you will learn that in years of good times, when the market is high and the economy is good, you will read from the Federal Reserve's report that due to their sound monetary practices and their efficacious management of money, they have produced this abundance. But let there be a bad year, and you will read in the annual report quite a different narrative, that despite the Fed's best efforts, outside forces have combined to usher in this current catastrophe. The Fed's monetary policy is often quite controversial, as is most government actions. So 2 rate cuts potentially in January, revised down from 3, which of course the market did not respond kindly to. But I don't think that was really the cause. If indeed, you want to ascribe the FOMC cause to the current market conditions, which is controversial in and of itself. But if you want to ascribe a deeper cause, it's in Powell's soft skills. Again, like I said, the Federal Reserve is not this puppet master that exerts direct control over the machinations of the economy. They exert soft power through the ability to instill confidence or instill restraint. And what they instilled yesterday was quite a bit of restraint. Personally, I think that they are overvaluing the upside risk of inflation, and I think they are dramatically undervaluing the downside, the upside risk of the labor markets. All right. Not only on top of the fact that I firmly believe that not only have those unemployment numbers been greatly massaged by the current administration, but again, they're not talking about any of the KPIs that really matter, right? Labor force participation rate. And maybe perhaps the most damning thing, we'll get to the Bitcoin thing here in a little bit, but maybe perhaps the most damning thing was his complete waffling or lack of anything of substance on the topic of tariffs. All right. Now, currently, the media is in a mass frenzy to tell us and kind of shove in people's faces how bad tariffs are going to hurt at the price, at the grocery store, for example. Now, I'm going to do exactly what Powell did, and excluding the energy and food prices. Again, they're saying PCE came down about 2%, but whatever. Okay, that's fine. And 12-month inflation is stable, according to them. But it's very important, and this will do you guys very, very well. All right, this will do you guys very, very well if you can consider this, if you can just understand this. Prices, consumer prices that we pay, and inflation are not the same thing. Okay, they're not. Inflation is an economic principle that refers to one thing and one thing only, and that is the money supply. When the money supply expands, that's inflationary. When the money supply contracts, it's deflationary. There is only one source of monetary expansion, and that is currently, and has been for a long time, deficit government spending. The federal government does not take in enough revenue in the form of tariffs and taxes to finance their budget. So they print money to pay for what they want to pay for. That is a tax. It is an indirect tax on you because inflation often leads to the cost of things rising. It also, if wages don't rise in line with inflation, often hurts the working class because the wages have not kept up over the last 30 years with inflation, driven by the insane and egregious deficit government spending. So inflation is created in one place and one place only. That's in Washington, D.C. Period. Full stop. Prices, on the other hand, are quite more complex. All right? So, key concept. The idea that tariffs are inflationary is incorrect. Tariffs, hold on a second. I got to pull up my notes here because I have some facts that I want to refer to and I want to get the numbers exactly right. Oh, dear Lord. Sorry, folks. 19-factor authentication to get into my notepad. How are you guys doing anyway? Sound off in the chat. Let me know what you guys are thinking. How you guys are doing. Are you guys wrecked? Not if you're following this channel. Oops. Okay. All right. Sorry. Okay. So, notes that I wrote down for this because I want to keep up to this. So, all right. So tariffs are disinflationary. Why? They don't directly expand the money supply. All right. Tariffs are only a tax on imports. They don't involve the creation of new money. They don't. They redirect existing money away from consumers to the government in tariff revenues. All right. This reallocation does not increase the overall supply of money. It does have the added benefit of, or debenefit of increasing government revenue. So tariffs are neutral with regards to inflation on their face. Now, if imports do rise, okay, which is up to the companies, if the price of imports does rise, tariffs, and I'm just shocked that Powell couldn't say any of these things. We have lots and lots of data on tariffs. Yet he just completely backed away from the issue. And I think that was probably the biggest driver of panic. If import prices become more expensive, tariffs have the tendency to reduce the quantity of foreign goods that are purchased. All right. This leads to a lower outflow of domestic currency, USD, to foreign markets. So more USD stays in the United States, doesn't outflow to other countries. All right. Also, if local demand, one of the common effects of tariffs, but this takes a little bit of time to materialize, is that local demand, domestic demand for those same products will switch from foreign importers to domestic alternatives. All right. That reduces overall economic activity. That is disinflationary. All right. GDP going down is disinflationary, which is not always a bad thing. All right. I know we're stuck in the cycle of growth, but growth does not drive, GDP growth does not drive economic prosperity. All right. It's actually quite the opposite. Savings, which is usually disinflationary, is what drives growth. Because when you save up your money, you can then invest it into an entrepreneurial activity. You can then invest it into other businesses. You can do greater force with a more amount of money. So the lower your savings is, the less your ability to engage in entrepreneurial or investment activities. And it is those entrepreneurial and investment activities that actually drive the creation of new technologies, new goods and services, new products. Consumer spending does not drive that. In fact, it's quite the opposite. So we do have to balance. I mean, I also thought Powell was completely wrong when he said that we've avoided a recession. 2025 we're dangerously close to a recession. We've already triggered the SOM roll. Go look that up. The labor market is toast right now, completely toast. Yeah, we've been told for 4 years everything's just fine. Okay, yeah. So tariffs act as a brake on money printing. They also act as a brake and lowering the trade deficit, which is overall good. So tariffs are disinflationary. They're not inflationary, which is completely separate from the idea of whether or not they will raise prices. That's far more complicated. And again, not just a simple answer. So anyways, that was a lot. All right. So let's shout out to our early chatters here. We've got Dana Clausen over on Rumble. Shout out to you, my friend. M3TZ was the first in the chat today. And then, of course, Felipe with Blood, joining the channel as a supporter. The feds are not bullish enough. We've got Magnus. We've got Mr. T, Peckham, Profit Bear. Yes to crypto, of course. One Fly VW. Who says, I just read the thumbnail and sold everything. Crypto Bull 21 and Ernest of Gaia. Who asks, since I'm on the topic, how do tariffs reduce money printing? Because they increase government revenue, which would reduce the likelihood of governments having to print money to finance their largesse. Tariffs increase government revenue. It also, the other fact, if imports become more expensive, tariffs tend to reduce the total amount of foreign goods that are purchased. All right. So this tends to have the perceived negative effect of lowering GDP. Again, this primarily leads to a lower outflow of domestic currency to foreign markets. All right. Which is the most important thing. But if demand, which will stay somewhat consistent, most likely go down, but demand will still be there for foreign imports. All right. Now, those prices will likely rise in certain sectors. All right. As a result of tariffs. But that acts as a disincentivization for consumer spending on foreign imports. All right. And if they're still paying higher prices for these foreign imports, that will give them less discretionary spending to spend on other things. Okay. And if there's less demand, so less demand goes down, prices come down. If there's less consumer spending, if we recess a bit with our consumer spending, which I would argue till I'm blue in the face is necessary, prices come down. The prices go up when demand is very, very high. If you pull down demand, so tariffs, we're so used to supply side economics. We're just so, like, the only thing that's taught, the only way people think is supply side economics. That's it. More. Debt. Which leads to debt. And it leads to getting over your skis. And it leads to deficit government spending. What's necessary is contraction. Contraction, increase consumer savings, bring prices down. And you can do that by focusing on the demand side of the equation, demand side economics. So tariffs act as a brake on domestic purchasing, reducing overall discretionary spending, which reduces GDP, good thing, and brings price down because demand for goods and services comes down. It allows us to go back to a safe and stable baseline. All right, now we got a lot. Brando Commando, good to see you in here as well. Green. All right, we've got a lot to talk about. Please buy some crypto. All right, I will buy some crypto today. Let's get into the markets, guys. We've got a lot to talk about. All right, we do have an long on Bitcoin here. We did, of course, break above kind of this short term. But anyways, we're just trying to play this low. Nothing big, just a little starter position. But we're gonna get into more of that here in a little bit. Let me get everything up. Any questions that I want to address right off the bat? The Fed are not bullish enough. Yes, that's exactly correct. U.S. Bitcoin reserve canceled or just FUD, not canceled, just FUD. I have a busted flush here. Do you remember when I said December 18th and 19th you would see the collapse? What's the date? Hey, man. These last 2 days, you saw that the market is owned by the staff on the exchanges and it's not retail. We never really arrived, says Peckham. Hey, man, very sage. I love it. I love to hear it, man. I have a busted foot. These last 2 days, you saw that the market is owned by the staff on the exchanges and it's not retail. I mean, yeah, absolutely. There is a lot of, altcoins are a lot more centralized than one might imagine. Let's see here. Yes, to crypto feels like getting some random subs, loving the alpha. Yeah, Powell blames the high prices. Yeah, it's erect. I'm gonna buy my mom some more Bitcoin. It's always a good Christmas present. In other news, my Doodles floor is 5.2 ETH. Good to you, man. There doesn't seem to be a lot of liquidity to pick up lower, is there? We'll see here in just a little bit. Stick LB, good to see you, my friend. If BTC crashes, I need it to crash real hard. This half asking doesn't do anything for me. And Disclosure Crypto wants me to check out the Gary Network. Yes, we will look at the Gary Network. I will put that on my list. All right, so before we begin, let's of course start off with the macros. Of course, I publish this information in my alpha report every morning, but let's go over it in a little bit more depth. Overall, where are we at in the market cycle? We're at about the 50th percentile. We had about 1, 2, 3, 4 weeks, so about 1 month of breaking above the cycle. This really, of course, kicked off following the election on November 5th, really helped us go from kind of the middle of the buy zone currently, or the middle of the least profitable buy zone. So from the purple to the mid range, not necessarily all the way from the bottom. We were on the 75th percentile of the buy zone. And our first kind of dip push up into here. Now, it would be remiss of me just not to point out what we saw the last time that we pushed up here. All right. Now, I am a very optimistic person. All right. I like to be aggressive. I like to strike when the hammer's hot. But again, we as prices go down, we're going to have to start talking about, potential bearish scenarios. All right. So I won't be remiss that we entered the summer doldrums, long wind up, breaking out of that channel. But again, overall, I do believe that we are going to have a right-handed cycle, not a left-handed cycle. We've only had one left-handed cycle in all of Bitcoin's existence, and that was, of course, the 2020-2021 cycle. We do have, I think, a lot more institutional interest and price. So I've laid out all these reasons like many times before. So overall, I'm pretty bullish. Pullbacks, buying opportunities, not scared whatsoever. But I think my biggest recommendation right now is, and I've been this way for a while, is, heavyweight in BTC. All right, heavyweight in BTC. Yeah, so and Mr. T, you are right. The Treasury is in charge of a Bitcoin reserve, not the Fed. But what was interesting, right? What was interesting is that in yesterday's speech, Powell, when he was asked about Bitcoin, he could have just said no, but then he went on to quote the statute that would need to be changed for the Fed to be able for for Bitcoin to be able to be purchased. And he mentioned that the Congress would have to do that. So he could have just said no. But instead he was like, well, you know, we're not allowed to. But, oh my God. Yes to crypto with the 20 gifted. We got to get the Streamlabs going back on here, man. Like, we really do, you know, so that we can get some, like, you know, bazingas on the screen, guys. My goodness. Yes to crypto. Thank you so much for the generosity, man. Merry Christmas to you as well. Ladies and gentlemen, don't forget to thank your gifters. If you were, Ernest of Gaia, love you, man. Was not free from Mr. Yes to Crypto. Thank you so much for your support, my brother. I really appreciate that. You are, of course, the GOAT. Yes, he is the GOAT, man. All right. So overall, just big picture, we're about 50% of the way through the cycle. We are not at a macro cycle top. We're not. Whether we have a correction, a slight pullback, whether we start rocketing up today, tomorrow, this weekend, we're not, according to all indicators, at a market top. All right. How do we know that? MVRV ratio has not hit the critical level, all right? We are right here. So we are encountering the MVRV resistance that we did encounter at the previous top of the market back in March, all right? So still a long ways away from a cycle top. Altcoin performance relative to Bitcoin, that does not really look so hot. All right, ladies and gentlemen. So this is, of course, altcoin performance relative to Bitcoin, which has been, this is the weekly time frame, which has been trading in this descending channel. The last time we had a really like awesome rally, and this was, of course, from 2019 to 2022, when we really outperformed, altcoins really outperformed Bitcoin. But that has not, of course, been the case since the peak in January of 2022. That has been a strong down cycle with lower lows and lower highs. Now, interestingly enough, we did put in, well, no, not really. Yeah, even logarithmic doesn't really help that out. And logarithmic isn't what we're going for here. You always want, when you're doing indices, you always want to do a regular chart. What price would I be like, okay, that was the cycle top? That's a good question. Yeah, you always have to have your invalidation. So we'll get to that when we get into Bitcoin. But overall, for me, I would need to see the daily time frame turn bearish and price put in a lower high underneath the daily time frame. That's when my long-term risk systems would kick in. I would consider the trend flipped, and I would simply trade the trend. All right, I'm a trend following trader. So right now, for example, the 5, 30, 1 hour, and 4, well, excuse me. So the short-term time frames are all bearish. The longer term time frames are all still bearish. We're at 4 hour 200 SMA support. We're at daily 30 MA support with 50 MA support still above us. So in the big picture, as a trend following trader, like, the trend is not broken. Like, 2 down days does not a trend break. It doesn't. I mean, we literally haven't even made a lower low yet. All right. So it's easy. It's really hard to call a market top, and I'm not that guy. You're never going to hear that on this channel. I will, of course, point to the KPIs that have been successful in helping us predict market tops and bottoms in the past. Okay. So it doesn't take a genius to be like, when price is down here, like, oh, this is a good buy spot. And it doesn't take a genius when we get up here to be like, oh, it's probably a good time to sell. All right. Because we're not, and I've been consistent on that, we're not in the accumulation phase of the market. All right. So selling, you know, from here to here is a good idea, right? The only difference is, like, at what good price are you going to get? So I don't really think that way. I don't think there's a specific price at which I would say, okay, that was the top of the market. You don't know those things, like, until 3 to 4 months after the fact, like, realistically. All right. My goal is not to try and call every top and bottom. My goal is to attempt to make money. And I can do that by following the trend and taking risk when appropriate. So I'm not going to get everything right, but at least I'll be honest with you. So again, according to all KPIs, we're not at a market top. Altcoin performance, though, does not look too hot. All right. Of course, you know, alt season, I think, would have been confirmed on a break out of this descending channel. That's not what happened. We did reject with another lower high and, you know, a lower low. This is a deceptive looking lower low. This looks like a lower high, like, to my eye. You know what I mean? But then you put the mouse on it and you're like, that's not a lower high. So what's the worst case scenario? I mean, obviously worst case scenario is like, you know, a return to the bottom of the channel, which would basically just be a bloodbath for altcoins and giving back all their gains and then some. We'll see. That's just what the weekly chart says. If we go down to the daily, we have been pulling back for quite some time. Previously, it only took 1, 2, 3, 4 days before we saw a bit of a dead cat bounce. And right now we've had 1, 2, 3, 4, 5, 6, 7. So we've been downtrending in altcoins for almost a week right now. We are at, of course, previous resistance as well. So it is not unlikely to be expecting at least a little bit of a bounce coming in shortly. And we can see one of the key things that you want to look for in momentum trading is that the size of the candles is getting smaller. All right. The size of the candles is getting smaller. So the enthusiasm overall relative to Bitcoin's price is starting to wane out. All right. And of course, prices are also getting quite low. Now, we do have to juxtapose that against a couple of things. Overall, so getting back to BTC real quickly, overall, the Bitcoin market looks extremely strong. SOPR is rising at 1.05, and this is kind of the indication of strength. So sellers are very happy to continue to buy at these prices, or excuse me, buyers are very happy to buy at these prices. Sellers are very happy to sell at these prices, which is a sign of overall confidence and strength, and an elevated SOPR generally means a bullish market. All right. We track this also to identify typically when bear markets have recovered, which we can see generally when SOPR is below 1 for extended periods of time, that's a bear market. And then when we recover above 1, that is usually the end of the bear market. And we can see that kind of playing out here in 2023. This signaled the end of the bear market when SOPR recovered over 1 after being below for a pronounced period of time. All right, stablecoin dominance does look a little iffy. All right, stablecoin dominance does seem to have found support at approximately 5%, which was where we also found support back again at the previous market top in March. And we are putting in quite a bit of strength in this area and potentially even looking for a breakout, now trading above the 30 DMA and of course the 10 DMA. All right, so worst case scenario is that we did experience a local top for altcoins and that we are going to see stablecoin dominance continue to ramp back up here. So watch that pretty closely. Overall, Bitcoin in stables dominance so far has rejected from the 200 SMA, which is fine. That's like the best case scenario. The best case scenario is that we see BTC, because of course we were trading this expanding microphone, broke down. I was expecting a dead cat bounce. That's exactly when I drew this. However, I was prepared for, you know, more pain in altcoins going all the way back up to kind of to retest the breakout point and then moving down for a lower low, which is fine. All of that would correspond going back to stablecoin dominance, not as, you know, grandiose of a movement as I kind of highlighted going all the way back to the 200 SMA, but potentially creeping up here to 6, maybe 6.25% in stablecoin dominance. But so far, you know, I'm not fully convinced by this rejection from the 200 SMA, but it is a nice sign to see. All right, so this is like the best case scenario. If this was a dead cat bounce and Bitcoin and stables dominance continues to decline. But stablecoin dominance, or excuse me, we typically are not going to see a big recovery in altcoins until Bitcoin breaks out to a new high and starts consolidating. Then altcoins tend to follow along. So when there's still a lot of risk and downside or fear or panic in the markets, it's very, very hard for altcoins to bottom out. And the low liquidity environment of cryptocurrency centralized exchanges and decentralized exchanges exacerbate that. So overall, that's where we're at. If anything, I'd have to say that overall the Bitcoin market looks quite strong and healthy. We are pulling back and retesting kind of the midpoint of the overall cycle. We don't seem to have any indication that we're at a market top. We are at previous resistance, which is a level we need to overcome. Altcoins do look kind of iffy right now. Again, possible that we do put in a higher low here. I'll be monitoring the daily time frame to look for some confirmation of a bounce. It does appear like we are slowing down, of course, in momentum. So I don't think it's unrealistic to expect at the very least a little bit of a recovery bounce, perhaps, particularly whenever we find a bottom, whether that's today, tomorrow, or over the weekend. I did read and I've done some analysis on the fact that typically if we get negative market reactions post FOMC decisions, because those always happen on Wednesday, those usually carry into the weekend, and then we start to experience recovery on Monday. So that would, I guess, be the short term. Stablecoin dominance does look like it is posed to rise. However, again, this could all change on a dime because stablecoin dominance could reject at resistance, just as we are seeming to see Bitcoin and stables dominance rejecting from the daily 200 SMA. So this could all turn around quite quickly. All right. With regards to Bitcoin, all right, let's get into the nitty gritty. We've got that bearish 5-minute trend, 30-minute trend, 1-hour trend. Of course, our 4-hour trend is still bullish. Our daily trend is still bullish. Our weekly trend is still bullish. Key levels for the daily. Let's expand the 5-minute time frame here. Where is our point of control? The most important one. Current point of control is about 100,817. All right, so that's your mean reverting target, and that's also the level of resistance that we want to break. That's right there at VWAP at $1,052. Value area low, which we're currently trading in right now, is going to be 96,210 to 98,092. So this is overall a buy zone for the daily for intraday trades. Value area high is going to be $102,009 to $103,891. 5-minute RSI is entering overbought. 5-minute BBWP is reaching maxed out volatility, which is typically a good reversal indication. On the 30-minute time frame, again, we are in that value area low. We're at the very bottom of it. 30-minute volatility is maxed out. 30-minute RSI is oversold. On the 1-hour time frame, we have broken down, back tested, and rejected from the 1-hour 200 SMA. 1-hour volatility is similarly already almost maxed out, 1-hour RSI is oversold as well. On the 4-hour time frame, we have pulled back to a more significant level of support, the 4-hour point of control, currently trading a little bit underneath it, as well as that 4-hour 200 SMA. 4-hour RSI is almost oversold, basically oversold right now. 4-hour volatility is almost maxed out. So as far as the 4-hour down, they're basically screaming reversal trade. On the daily time frame, we are at the 30 DMA, which has acted as support for this entire uptrend. Right, this entire uptrend has never closed a daily candle below the 30 SMA. So something very, very important to consider. However, I saw a lot of people posting that today, and some of the special, Telegram groups that I'm in on crypto Twitter, people were posting that, and I don't really like that. I'm a trend following trader, but I also, of course, with trend following trading, you will also look for contrarian entrances. So if your overall thesis is bullish, of course, you want to enter on blood. So you want to buy low prices, you want to buy the dip. And so I overall like that idea. And I think that's my default idea, but I have to state that when I see a lot of other people parroting my idea, it makes me really skeptical. I prefer to be the person with the idea. I prefer to be actually contrary and view buying opportunities as buying opportunities and not dangerous. But with that being said, I just have to point out the fact that statistically this has been the exact situation which has generated great buying opportunities so far in this market. And so we're either on the precipice of breaking into a bearish trend, or, ladies and gentlemen, it's just a pullback. Buy the dip. All right, whatever you do, I want you guys to manage your risk on the daily time frame, on the 4-hour time frame, and I think intraday trades, again, just be managing risk quite effectively, because it's always risky going long when there's fresh panic in the markets. But overall, kind of like where we're at. That's why I entered the L. That's why I entered the long. Down a little bit right now, but we'll see. We will probably not average down and see if we actually get a bottom here. All right. So with that being said, I'm more interested in seeing renewed strength from BTC before I start getting over my skis again with altcoins. All right. I do want to preserve capital. With that being said, there's a time to be aggressive and there's time to not to be. As far as Ethereum goes, we've got a bearish 5-minute, 30-minute, 1-hour, and we've got a neutral trend. We've got a neutral 4-hour trend. We've got a bullish daily trend. We've got a bullish weekly trend. Key levels, expanding our 5-minute time frame here. Our intraday point of control is going to be at approximately 3,687. That's also where our current level of resistance is at. Price is currently trading in the value area low of the day, which stretches from 3,335 to 3,448. Our value area high is going to be 3,683 to 3,796. All right, key important things to notice here on the 5-minute time frame. We did just put in a hammer candle, a bit of a bottoming pattern. 5-minute BBWP was overbought right here, and we do have regular bullish divergence here on the 5-minute time frame. So probably a good buy opportunity in the short term, at least for a return back up here to our bearish 5-minute trend. We're seeing something very similar on the 10-minute, where we are trading, of course, in the value area low. We have 30-minute BBWP maxed out and 30-minute RSI oversold as well. On the hourly time frame, same thing. Hourly BBWP maxed out, hourly RSI oversold. On the 4-hour time frame, 4-hour BBWP almost maxed out and 4-hour RSI oversold. So again, if you're looking for contrarian entrances, this is it. All right. Adam back. Welcome to the Rumble stream, man. Good to have you on. Should I buy? That's up to you and your risk tolerance. But again, I can point out that just statistically, yeah, like literally like this moment tends to be good buy opportunities, right? Manage risk. If we get a bigger dip, I mean, huge volume spike. All right. Maxed out volatility, oversold RSI on all time frames. It doesn't really get much better than this. On the daily time frame, this is also a pullback to the 50 DMA as well. Well, it's not Adam back, but that is how I pronounce his name. But it's probably more properly Adam Bake. It's Adam Bake 93 over on Rumble. Yeah, Satoshi is here. So if I had to suggest a setup here for Ethereum today, buyers right here on this volume spike and most likely oversold, we would just be pulling up, of course, our take profit indicator, which would be Rodrigo. Come on now. And long interest is from here. So let's say entries at around 3,400, which is approximately where we're at. We would be looking at an initial TP of 35.38, 36.68, and 37.98, managing risk around 32.78. All right, which 32.78 is below or approximately right at $3,300 level of support. So it just depends. Do you want to take the risk here, or do you want to attempt to snag support here at 3,300? If you're going in big and swinging on the daily, which I think is probably the safer option right now, giving yourself wiggle room, it's really hard to, or it's not really hard. It's more difficult to nail tactical time frames like the 30-minute and the 1 hour. All right. So it's safer always to do swing trades, daily time frame, give yourself room to breathe, because the daily time frame is going to allow you to have your stop well below that daily. Well below that most recent level of support. So again, taking big swings on the daily, we'd be recommending, again, entries right approximately here, looking at targets of 37.47, 40.95, and 44.43, invalidation at 30.47. Again, don't risk more than 2 to 5% per position. Solana. Hopefully, again, this will be great. You know, if in 2 weeks we're just right back up in the trading ranges, altcoins then recover, it'll be like, hey, you know, again, it takes balls. It takes balls to react in the moment. All right, it takes balls to react in the moment. I'm not gonna lie, it just is what it is. And so, and there's no shame, by the way. There's no shame. I advocate trading with a strategy. So what we do here on the stream is a lot of discretionary analysis. But what I do in the mornings and in the evenings and throughout the day is I allow my strategy to tell me what to do. All right. All right, Solana, which was requested. We, of course, have that bearish 5-minute trend, 30-minute trend, 1-hour trend, and 4-hour trend. We also have a bullish daily trend and bullish weekly trend. So overall, not bad, just deep pullback. Solana, probably the worst, of course, of the top three in its pullback. So it's pulled back pretty far from its previous high, getting pretty close back to that daily 200 SMA and the daily point of control at approximately $167. We are in the value area low of the day, so just intraday, this is the most opportune area to enter. BBWP maxed out previously over here, and so we do have regular bullish divergence on the 5-minute time frame. We have a maxed out 30-minute BBWP, so maxed out volatility on the 30-minute time frame and an oversold RSI, maxed out volatility on the hour time frame and oversold RSI, and on the 4-hour maxed out volatility and an oversold RSI. I mean, that's it's about as a contrarian of a buy signal as you could possibly get, in addition to a big volume spike. And actually lowered volume on the 5-minute time frame. There was more selling here than here. So potential seller exhaustion. Again, that buy zone is going to stretch from 185.46 to approximately 193.53, with the value area high going to be 210.33 and 218.41. So buy here, sell here is typical strategy. Or buy here, sell at the point of control or VWAP for mean reversion. higher accuracy, lower returns. It just depends on what you value. I think for medium risk, again, we would be recommending something like an hourly position. For the dip buyers out there, that would be an entry approximately here, targets of 196, 203, and 211, and invalidation at 180. And for those attempting daily swings at this point in time, real bottom buyers, as the daily trend is still bullish, it would be an entry here, targets of 213, 238, 264, and invalidation at 162. All right. So looking at Solana discretionarily, again, it's hard to ignore all the time frames being oversold and maxed out volatility. You rarely get that opportunity. Of course, again, we can go back and just kind of weigh all of this against others. All right. The only, others isn't filling us with a whole lot of confidence. You know what I mean? Because there's just really no strong level of support. And that's not really the way that others works. We just kind of, notice and follow the trends. And so worst case scenario, others does go all the way back down to the bottom of the channel. Again, I don't want to be too bearish here, but I just want to point out the downside risks. And generally, it's just always better to be heavily weighted in BTC during periods of market correction. And then once a little bit of confidence has been restored to the market, enter in. You hear all this, like it is true that that it is profitable to buy when there's blood in the streets, and that's why I'm pointing out these opportunities. However, what's more profitable? Like making money. Okay, making money is profitable, and so you have to understand that a lot of traders who specialize in snagging up big positions on altcoins on the dip, they're well capitalized enough to stomach deep pullbacks. All right. And so they're not, we're not really talking about leverage trading positions. We're talking about the ability to go up spot in size and chill on it. And so if that's the way you're approaching the altcoin markets, which is what I would recommend, wouldn't be recommending leverage positions, not with this volatility, but I would be recommending for the average trader getting the opportunity to go up spot. All right. We've got XRP and Doge, and then we'll cover the broader market. We will look at Phantom. We will look at Gary Network. I saw specific requests for those. XRP, guys, I'm very bullish on XRP because XRP is actually holding up really good. Like, do you see the panic selling on XRP? I just see XRP going back to support. All right. So I entered XRP at 206. I sold around 240. I sold around 260. And I had moved my stop loss to 220. That did just get hit earlier. Again, here's the closed trading signal somewhere. Jeez Louise. Here we go. Here's the closed trading signal that I put out for XRP earlier. 20% return, about $4,200 in P&L, and overall portfolio growth of about 3%. So good trade. Could have been more, obviously. It would have been probably a portfolio growth of almost 5% if it would have gone to TP3 instead of pulling back, or if I would have taken more profits. But again, that's all hindsight thinking. It's not helpful to actually making money. You should only focus on hindsight thinking on things that you can actually improve. And what you can improve, what you cannot improve is any individual trade. You can't. Doesn't matter. All right. The only point is growth. XRP. All right. Pretty bullish on XRP. I think if anything has the potential to recover strongly. Again, I keep saying this and I'll say it till I'm blue in the face. If you are looking for the best things to invest in, you want to look at the things that hold up the best in the worst times. You want to look at the coins that have pulled back the least. All right. XRP is one of those coins. Amazing strength from XRP. Not even testing its previous lows. So what that's telling you is that there is massive. It's not that there's not selling on XRP. Of course there is, but there is so much more buying demand on XRP. Than on pretty much anything else. So XRP has a bearish 5-minute, 30-minute, 1-hour trend, bullish 4-hour, bullish daily, bullish weekly. All right, we are in the value area low for the day, so opportune moment to snag up long positions intraday. We can see on the 30-minute time frame that opportunity exists there as well. Regular bullish divergence on the 5-minute time frame. Regular bullish, no, a little maybe. Well, equidistant bullish divergence, I guess, on the 30-minute time frame. The 1 hour RSI is showing regular bullish divergence. We have the 4 hour RSI almost oversold. We don't have the kind of maxed out volatility that we have on everything else, but it's probably as close as we're going to get. XRP is still above the 30 DMA. XRP is still above the 4 hour 200 SMA. I mean, overall, I think XRP is pretty bullish here, and we're right back at support. So I might even be looking to re-enter XRP later tonight. Leverage is a dual-edged sword. Well, of course, yeah, of course you're only 2x leveraging, Andrew, because you're rich. Old money bags. The rest of them poor folk with only $2,000 got to use that 50x leverage to even make it worth the while. You over there swinging around $1 million position sizes and everything. There's comfort in prosperity. Dogecoin. All right. Dogecoin is also in the value area low of the day. Dogecoin is also showing regular bullish divergence. Dogecoin is oversold on the 30-minute time frame with maxed out RSI. Dogecoin is oversold on the hourly with maxed out. Oversold on the hourly with maxed out volatility. And Dogecoin is also oversold on the 4 hour time frame with very close to being maxed out volatility. While selling volume is rising, the volume was not as high as previously over here. We are trading beneath the daily 50 exponential moving average. We are, of course, trading below the 4 hour 200 SMA. So pretty deep pullback in Dogecoin. Now, Dogecoin was a coin that I de-risked several days ago, and I'm obviously quite glad that I did that. Just as I'm quite glad that I sold like 50% of most of my cryptos at the top. But yeah, again, I'm not bearish for 2025. Maybe that's how I did it. Hey, man. Wise words, dude. Wise words. Exactly. So let's see here. So we can tell from this big volume spike on the hourly and of course the candle structure that a lot of buyers did step in here. And now selling volume is declining a little bit. So while it's not a guarantee that the bottom is in, I do think that we are going to be experiencing a bounce. If not today, tomorrow, then certainly over the weekend. I don't know why that, there we go. Let's get rid of that. So for entries right now, I don't know why it's doing that either. That's so annoying. I got to update the code. There we go. For entries right now on the hourly time frame, just kind of looking for a short-term recovery bounce. We could have targets of maybe 327.8, 34.72, 36.65, with invalidation at 28.85. All right. Looking for daily swing positions to the upside. Come on now. So this is you can see this was my original thesis for Dogecoin, and I have now since de-risked that. So we need to take the price labels off, and then of course we can also boom, boom, and then admonishment did not work. All right, setups here though. Entries right now on the daily time frame, we'll be looking at targets of 3656, 4239, 4817, and invalidation at 2495. So here we go. All right. Oh, sorry guys. You didn't tell me to turn the music on. Let's get the music going. I want to check liquidation levels. And I want to show you guys something. Which is that we are running out of liquidation levels. All right. Let's go back even further. Let's go 2 weeks. Okay. And we can even go back like a month. Okay, so I want you to see this. Like, we've basically knocked out most, if not all, obviously not all, but we have knocked out so much of the medium to low leverage positions. Okay. We've knocked out, let's just check here. And we've knocked out the 10x positions. We've knocked out anything above 10x leverage. All 10x leverages have been knocked out on Bitcoin. So we have another huge cluster of liquidations between $89,000 and $85,000. Okay. But so far, we've taken out all this liquidation leverage, which is exactly what we've done every previous time, and then moved on to push to a new all-time high. So far, it's still a higher low. And if we go to, well, let's go to 2 week. 2 weeks seemed pretty helpful there. Yeah, all this is pretty small potatoes. 94,071. There's almost $100 million. There's about $85 million in liquidation leverage. Everything else is pretty small potatoes. I want to check out their multiple models though. Yeah, I know. That's probably covering up the liquidation levels. My bad. Thought about moving my. I've thought about moving my camera to the top right of the screen or something like that, or like more toward the top rather than just down at the bottom. To like. But yeah, whatever. Apologies. I have choices today. Okay, I got you, Drew. Let's see what we got going on here. Oh, hold on a second. I gotta like get into that. I know what you're talking about. I need to switch to my CC account. Oh, you're not talking there? You're talking about Discord? If you're talking about where are you, you're talking about where you regularly message me, then I don't see anything. Bro, Cephas. Okay. Alex says we have a big CME gap at 77.9 to 80.7. That wouldn't even be a 30% drop from the top, but it would break structure. Yeah, you are right. And you're both right. You guys are both right. I think we're going to drop harder right now. There's something. Yeah. I think I'm going to probably close my... Take my little $300 loss. I don't really like that. We'll see if I puke the bottom here in a second. I don't like that. I made my spidey senses tingle. Okay, let's get into some of our other requests. This isn't complete yet. I'm still working on this one, but let's check in. Of course, we talked about we don't have our aggressive pullback strategy on right now because we've lost the 4-hour and 30-minute trend. All right, so aggressive pullback strategy is off right now. It deactivated 2 days ago. Hasn't taken a single trade since then. Were we nailing it prior to that? Yeah, won this leg, lost that leg, closed on 30-minute loss of trend. Good. Yeah, overall pretty good. But yeah, the aggressive pullback strategy is off. And we're not turning the contrary on at this point in time, which would be the opposite of that. Discretionary altcoin trades got kind of smoked today. My position on ordinals and WaxP hit their stop loss, and my position on JTO hit their stop loss. So that's about 6% loss of portfolio. I'd been up recently about 40%, so that's giving a little bit back. But yeah, altcoins gonna get smoked today. Actually, Link and Sundog. So that's about 10% of my gains I gave back today, unfortunately. Which is, I mean, it is what it is. I'm not too worried about it. Let's see here. No big strength from my mid caps either. No strength from the poop coin market. Sold virtual. Now it's down pretty bigly. Let's see here. Let's get to low caps like Nero. Of course, Popcat's getting obliterated. Beep is dead now. We're going to talk about WaxP and ordinals. Zig falling. Jesus Coin now no longer sniping my entry. All right, my entry was no longer sniped. Okay. Let's do global markets and then we'll get into those requests. All right. Of course, gold taking kind of a hit along with the rest of the financial markets, but very, very close to support in an uptrend with a creeping up 4-hour 200 SMA. Silver taking a worse hit today. We are now trading below the daily 200 SMA. RSI is almost oversold, so I would keep your eyes on silver. UNG, is this the time? Guys, I'm long to the gills on UNG. Okay, this is the largest position in my Charles Schwab account. All right, is UNG to the long side. I've been accumulating between about 12 and 13. This, come on, Lord. Come on. Lord, let this be my time. Let this be my time. Okay. Oil futures, again, largest position in my Wanda account. We need to go down. We need to go down. SPY yesterday down about 2.94%. Probably one of the worst days in a long, long time. Somebody said it was like the worst day in like, I don't know, a couple of years, but big down day. But really just back to the bottom of the daily buy zone. And the NASDAQ again, massive red candle yesterday, but again, just really back to the bottom, back to the top of the buy zone for the NASDAQ. Gapped open today, sold off. Same in the Qs, gapped open, sold off, but we haven't made fresh daily lows. Nothing too crazy. US equities, MicroStrategy down at the 50 DMA. Coinbase breaking down from consolidation down at the 50 DMA as well. Nvidia has pulled back basically to the bounce level that I was expecting, and we did bounce. Drew this quite a while ago. We did bounce, pulling back. Maybe we revise now, but yeah, overall my target would be, well, I mean, that basically happened. Like this happened exactly as I thought it would. I just thought it would take a little bit longer. No, we clap back in a day to retest the 50 DMA from below. So probably be a little bit bearish on that. Bearish on SMCI. Tesla finally kind of topped out. Hanging man candle pulling back to the 10 DMA. I would actually expect, I'd like to be bullish on Tesla, but I actually expect a little bit further pullback. Palantir is consolidating, probably pulls back to the 30 or the 50 DMA here. Vistra has already pulled back to the 50 DMA, so I'd be a buyer on Vistra right here. And DJT, I'm not too worried about DJT. DJT broke above the 200 SMA, pulling back, retesting the 10 above the 100. Maybe pulls back here to maybe 30, 32. All right, let's see how we've been printing money though, because as I'm sitting here thinking about longing things, Minx is just steadily trading the trend, ladies and gentlemen, doing what it's designed to do. Took its first initial short on December 17th at noon at approximately 106,494, closed out at 104,218. Shorted again on December 18th at 7 a.m. at a closing price of 103,976, added to the position. Noon on the 18th at 102,777, closed the position on 6 p.m. yesterday, and then it shorted again 6 hours ago at approximately 99,362, and is probably going to be signaling for a take profit here. So pretty nice. Minx passively making me money while I am trying to buy bottoms. Minx is like, what the fuck are you doing, man? Just go short. Did really good on Ethereum as well. The Minx strategy on this dump does, I mean, this is a trending strategy, so it does fantastic and strong trends and high volatility. Took its first shorts on December 17th at 3 p.m. at a closing price of 38.81. Closed out at 38.42. Went short again on 7 a.m. on December 18th at 38.35, added to the position at noon yesterday at 37.67, and then closed those positions at 36.46 yesterday at 7 p.m. And then it went short again about 6 hours ago at a closing price of 3,636. That position is still open, although on the close of this candle, this will be a take profit signal. So overall, pretty good. Solana did pretty good as well, looks like. Took its first short over here, closed out pretty quickly. Took a short again, closed, and then shorted again. Yeah, about 6 hours, like everything else. So yeah, so I think I was wrong. I think I was wrong about that. Yeah, I was wrong about that. Um, 1, 2, 3. Yeah, let's go for broke. Probably on the hourly. Yeah. All right, hold up. Wait a minute. I don't want to give back. I don't want to give back all my automated gains by sloppy day trading. RLBM, sorry I didn't see your chat earlier on Rumble, my friend. Thanks for joining us. How about Pengu? Pengu is probably... Pengu is either at the beginning of a parabolic trend. I see you, man. Sorry, it took me a while. I forgot about my phone. Oh, I see. Oh, choices. Yeah, hell yeah. Hold on, let me see here. Woo! Honestly, bro, those are both fantastic. But if you, so Andrew, if you're listening, if you have a different recommendation, like if you think that I'm wrong, then I'll take your recommendation. But, you know, because I'm a fan of the Glens, right? I'm a fan of the Glens, but I want to be a little contrary, and I think I got to go with that Mac Daddy, bro. Go with that Mac Daddy, brother. Inflation on deer feet is high. So what if your system won, you were bullish? I don't understand. That's the point of the system, is that it has the right rules and it listens to the rules, but it won't catch, like I'll catch so often. Here's the thing, right? With my discretionary trades, my hit rate is a lot lower than my strategy with my discretionary trading, but when I'm right on my discretionary trades, I tend to make a good amount of profit. And so overall, it's worth it when I run the numbers back. Pengu. Hold on a second. Okay. So what we want to see here now on Bitcoin, right? Because I puked the bottom, as I'm wont to do. So again, I'm not going to get too crazy here because a big mistake is over trading. So I'm not going to overtrade. It's not what I want to do. What I want to see here is I want to see some trend confirmation. This looks very bottomy to me. I've been talking about this being bottomy all stream. All right. We've got the maxed out volatility, oversold momentum indicators. We've got the bullish divergence, okay, on almost all the time frames on Bitcoin. We've got the daily level of support, and we've got the deviation below the 4-hour 200 SMA. All of that's super bullish. Well, it's not super bullish, but it's very contrarian bullish, okay? It's very contrarian bullish. So this looks good. Andrew, what? You said both? Bro, I don't know if I feel... I think that's a little too generous, man. Listen, I'm gonna say that Mac Daddy hardcore, and then I'm gonna leave the rest up to you, brother. All right. Fine, you get one. And then we'll share and compare, man. Just make sure, obviously I'm gonna see it, you know, because of how it's got to get here, but that way I can just make sure that you give me an avenue to reciprocate. Merry Christmas to you, man. All right. So, but what I want to see now, of course, for some slightly more principal trading, we've come up to that 5-minute level of short-term resistance. Okay. I want to see if we reject from the 5-minute momentum bands here on the 5-minute time frame. And if we do, I will take a stab at buying a higher low with invalidation below the current low, because we might be gearing up for that good old chode and balls pattern. You know what I mean? And when we break the gooch, we go. You know what I'm saying? But we'll just be patient. Be patient. So 30 minutes left in the stream. We might not catch that live, but I'm going to keep that in on my eye right now. And now, as promised, finally, let's go look at those charts. Yeah, as far as PTP is concerned, we don't have a daily contrarian signal, but that's because daily PTP for the pullback strategy requires confirmation. So anytime we get a bullish crossover above, that's aggressive, but I prefer the bullish crossovers that occur on pullbacks below the zero line on minks when we're in a bullish uptrend. So for example, here's the long signal that was generated on the cross underneath the zero line, and you can see how much more staying power that had. I mean, it was a great signal. And this one too, right? So look at this long signal, right? So the primary long signals that we're getting, those were all really good. Obviously this one was much better, but this one was good too, right? This one was good. This one had decent follow through. And the take profit signal was obviously late, but whatever. So life's pretty good. But volatility is expanding on the daily time frame. So Gary Network, which I'm not super familiar with off the top of my head, although I do believe I've looked at it before. Yeah, Gary Network. I feel like its ticker symbol should be a snail, and it should be GARY with a Y. So yeah. Where was I? Sorry, so many tabs. Just confirming that that is right. It is on Kraken. Yes, indeed. It's Gary USD. Market cap of 7 million. And it's in the Alameda Research portfolio, and it's also in Galaxy Digital's portfolio. So it's a VC coin on the Solana ecosystem. I typically prefer so just out of the gate, I prefer like Jito and Ray as my Solana proxy trades and not VC stuff. Yeah, because most VC stuff looks like this, right? Compared to, you know, like compared to Ray, right? Which looks like this. So like dramatically different. The strength of Ray this year has just been fantastic. I think Ray is going to continue doing well. The strength of things like Jito, which I'm very bullish on, right? Looks freaking fantastic, even though obviously I missed this trade. I think we've pulled back. I think I probably really need to swing this evening. Probably need to swing, not gonna lie. Probably got to buy the dip, because that is how I'm feeling. That's how I'm feeling across the board. Excuse me. But Gary, Sorry, let's give Gary its due. Let's give Gary its due. Yeah, man, I'm just gonna point that out. Just gonna point out Gary, and then I'm gonna point out Jito and Radium. Just gonna mention that one more time. The price action looks like accumulation. Obviously, the lead up looks like accumulation, break the 200 SMA, pull back. But I don't really see the big volume signatures that I would want to see for long scale accumulation. This looks like so what did the last rally do off the bottom? 425%, 241%, 90%, and then breaking down below the 200 SMA, marked the death null. We also have this break above the 200 SMA, which failed and lingered, but of course the season was different. Yeah, this thing started picking up steam, yeah, on November 5th, just the same as everything else. And what did it return since then? Off the bottom, returned about 325%. So not too dissimilar from this first rally. Of course, from the bottom to the top, that was about 671%. So, I mean, theoretically, maybe another 2x from here. Just if we're going to play out into a deeper pattern that we had previously. So that would be putting price, well, and conservatively like 0.03 to 0.38, somewhere around there. That's a pretty lofty price target though. It's actually, excuse me, that's like it's a 2x. It's actually a 3x, excuse me, 200% is a 3x. So I don't know, just based off price performance, I'm not really feeling it. Let's talk about the technicals, of course. We are trading above almost all major moving averages. We have lost the 10 daily exponential moving average. Gary overall, though, I mean, to be honest with you, right, has held up really well. So that is a sign of strength. Not a lot of selling pressure on Gary. And this is not a small coin. So small market cap coin holding up pretty well. That is, I do want to kind of juxtapose everything else against that. Obviously higher risk, lower capitalization, sub $10 million market capitalization coin. On the daily time frame, we are at that 200 SMA level of support. Daily Minx is almost oversold. MFI is not anywhere close to being oversold right now. And there could be a potential, although we already have retested it we already have retested our breakout point of about 0.94. We already broke out, retested that as support. That occurred very, very quickly here, and then a pullback, which probably, we could do the good old Fibo, was probably something like, yeah, 786 pullback. And then we also like immediately clapped back to, yeah, like textbook. Yeah. At this point in time, I would say that if we are going to appreciate, the phase is probably much more similar to this area. That's probably where I see the most similarity, where we're coming off of a low. We have our first initial big spike, sideways consolidation, and then nice break of resistance. Depending on where we're at in cycles, sometimes you want to be hesitant about buying breaks of resistance. But in this case, that is actually the setup that I would do. We have resistance at about 0.0149. and we have support at about 0.0108. So I would wait for a break of resistance. Okay. And then I would probably set my stop loss underneath the breakout candle, not all the way down here, most likely. Depending on how you want to do it. If you set your stop loss all the way down here, you're just gonna have to use a much smaller position size. But if you set your stop loss underneath the breakout candle, you can use a much larger position size, and I think manage risk much more effectively. So Gary, I don't really like big picture because of its lackluster price performance overall. But I do like the fact that it's held up really, really well. And we are rectangularly consolidating above support and, you know, capital rotation. So I like Gary. The trade setup I see, again, just kind of looking back at a previous way that things have played out before, I think you would have an opportunity if you're going to get a profitable position waiting for that break of resistance. And then basically selling your first Jamungo candle, you know? Yeah, bottom feeder bought here and successfully was able to close that trade. No bottom feeder signal right now. And yeah, so I would actually probably set limit bids at 0.0096 around this zone right here, because that's where there is a lack of liquidity. So I'd set my limit bid right there, and I would just wait to see it get filled. That way you can buy if price moves down 15%, and then you can just mean revert sell back here on a 30% move to the upside. Otherwise, I would look for that breakout, probably at this point, a daily close right here above 0.0136. Huh. I was right about ESS. Hit my first posted break take profit target. Did not hit the stop loss that I posted. Looks like I didn't post a second target for it. So shout outs to those who followed me on ESS. Proxy breaking underneath support on base. Nero, yeah, obviously we talked about that, broke support. So I think I might actually add an alert on Gary and add an alert right here. And then I think we had, you just grabbed proxy as to crypto. Yeah, that's pretty low, isn't it? All right. X019 CED. That's not what I have. Same chart though. See, the problem with, yeah, so we looked at this. Wait a second. I don't think this is the right one. Is it? It looks like the right chart, but I don't think it is. No, this is on Polygon. This isn't it. Unless it is this. Yeah. So I'm looking at 717C6. And that's exactly what I have here. Wait. C6. All right, excellent. No, it's yes. But it's 6 CED. That is the name of the actual. That's the actual contract address, which is exactly what this is. So I don't know what to make of this because insiders holding quantity is 77.95% of the total. So yeah, I mean, I think this is, I remember this. This is exactly what we talked about the last time I looked at this, right? 6,270 holders, but you have and again, maybe there's something I don't know about proxy, because then I said this and everybody was like, no, proxy's like absolutely not a scam. But then like all the top wallets are phishing wallets. Now, granted, they're all holding. They haven't sold. Only a few have. This one made 51,000. This one lost 3 grand. So, yeah, I don't know. Keep in mind that's just some AI stuff too, you know? But most of the insiders, according to GMGN anyways, have not sold. None of the 67% that's sitting in one wallet address. So maybe that's what, maybe that's why, so I want to look at this wallet address. So this wallet address is holding 0 Ethereum, and it is holding that doesn't make sense. This proxy should show up. this is all just dust. Good to see you back, man. So it must be, it's a smart contract. Which means, so this is the Hedgie account. This is the Hedgie wallet. Hedgie finance lockups, yep. So you're right. 67%. What is going on here? 67% approximately is locked up. 67.16% is locked up in Hedgie. So let's look at this address. Let's look at the next top order. All right, this is Hedgie Finance vesting. Okay, so 6% is also vested. And then following that, we have this. So yeah, I think there's probably just a disconnect between how GMGN is seeing all these interactions between the wallets and the smart contract and not able to differentiate between them. All right, so this gentleman is not a smart contract though. This guy is holding, again, for some reason his proxy isn't showing up, which is odd because according to GMGN, he holds 1.74% of the supply, or approximately $68,000. Maybe it's just not showing up on base scan. Anyways, let's go look at smart. All right, let's talk about market capitalization. So currently trading at about $3.9 million market capitalization, reached a previous high of almost $43 million market capitalization, which was pretty good from the overall consolidation period of about 500,000. I mean, that's a 60,000% return. So proxy made some people insanely rich. Yep. So I don't want to fade your buddy, but I got nothing on this right now. You know what I mean? This thing went completely parabolic and it's not really showed any strength since then. I would really love to see, you know, I mean, even back here in accumulation, right? We had higher highs and higher lows, which is really what I want to see here. We had higher highs and higher lows. And then we took out the low and that was basically it. And that's how cryptos are. Low caps anyways. It's just momentum. So I really don't got any, insights on proxy. That's not really how I trade low cap coins. I typically don't buy things on the lows just because 99% of the time when I do that, I lose money. So I just like to see some higher highs and higher lows from proxy. Fortunately, I don't have much more to say about it than that, my friends. I apologize. All right, we got 20 minutes left in the stream. Here you go, Andrew. I'm shooting you what you need right now. Actually, Sorry, guys. Give me one sec. Hey, we have quite a few people on here today. Hey, hopefully I don't lose you guys. Sorry, just giving my address out to strangers on the internet. It is gosh darn. I actually don't know it off the top of my head, but I'll send it to you like as soon as I get off the stream, Andrew. Good timing. I'm really glad to have all these people in here. You guys are doing fantastic. All right, let's check back in with the big dog. All right, we got over our skis. I forgot about our game plan here. Okay, yeah, so Bitcoin, of course, has shown some short-term support at 95,701. That does make a lot of sense. Again, 4-hour 200 SMA, it's the 30 DMA. This has literally been the uptrend support for the entire cycle. Everything is looking pretty oversold, but you know, again, caution is good. It is better to actually, it's a beautiful thing to buy the bottom, guys. And we got some strong bottom signals. I mean, everything from the 4-hour down, the 4-hour, the 1-hour, the 30-minute, the 5-minute, they're all pretty much maxed out volatility, oversold momentum oscillators. All right, probably going to see a bounce from here. Whether or not that's the bottom, the end of the pain, of course, remains to be seen. All right. So we will probably what do I think the odds are that 107,000 was the top? I would say probably around 5% probability at this point in time. And the odds that the odds will increase the lower price goes, as will the shade of red on my thumbnails. But if we recover from here, I think we have the capacity. Again, my original call was 120,000 over the next 2 to 4 weeks. That was based on the momentum signal. And we are now in, by the way, guys, I'm just going to point you guys to my original trading signal that I put out. Gosh, it seems a while ago. Let's see here. I'll share this with you guys. But here we go. So I made this call on the 11th, so a week ago. I said to buy between 95,233 and 97,044. So that position is open. So I'm pretty bullish, guys. And we will see what the market wants to do to us. And I think be really judicial with our trade here. It's going to be very high risk. And I don't think I'm actually going to take it, because now is not really the time, guys. And I kind of want to make this clear. You know, it's fun. We do a lot of these, like, you know, high leverage situations on stream, but this is not really the time. And it's not really principled trading to be using lots of leverage in situations like this. It's just not, right? It has nothing to do with how good of a trader you are. It has nothing to do with confidence. There is, of course, a style of trader that will, you know, degen like 50x long a dip like this. But that degen is not me. All right. I'm a little bit more concerned with preserving my capital and also like rapidly growing it. But an emphasis on this situations like this, guys. Let me be very clear. If you want to have longer term success in crypto, you know, and not get blown out, because you can get lucky, but eventually if you don't have sound trading principles, sound investment practices, you're going to get blown out, because crypto is just too volatile. Like, you can't screw around, man. So I know that I could make a ton of money by just ridiculously degen longing this if I'm right. But I know that if I allow myself to practice that over time, I'll lose money in the long run. So situations like this are for spot buying. They're for spot buying. Okay. That's what the situation's for. I prefer to use leverage when we are in a strong uptrend, and I want to add oomph on a short period of time. That's not this situation, particularly for altcoins. Bitcoin, again, I could see myself doing something, but I think people who are using leverage on altcoins right now to buy the dips, I mean, I wish you the best, but this is a situation, this is a spot where you want to be altcoin doing spot buying. I guess I overall like wasn't too silly for closing that position out, because that happened over here, or actually right here. And I mean, we are objectively like a lower price than that. So far, did not break up into that 5-minute momentum band area. We are pulling back down into the value area low of the day. We're still at where, I mean, we've been in the value area low of the day, to be quite honest with you. But yeah. I want to see that reclamation of the 5-minute momentum bands. All right, guys, we have 10 minutes left in the stream. And so we're going to do what we normally do. And we are going to go over to Twitter, and we're going to say some controversial things. All right. All right. Is anyone else disturbed by the BlackRock? I mean, I've been hearing so much. Yeah, let me get Let me get you guys' opinions on this. Are you guys aware of this? All right. So BlackRock put out this, this right here. Right here. Where is it? It's at 125. Right here. Hold on. Fixed supply. Bitcoin has a fixed supply of 21 million. And you'll see here, if you look real closely, I'm going to expand this out. Let's get back here. You guys will notice that there is this sub caption here. It's like there is no guarantee that Bitcoin's 21 million supply cap will not be changed. Because there's not. It's programmable. People literally freaking out all over the internet. This was all over my feed this morning. People literally freaking out over BlackRock telling the truth. Because I don't know if you guys are aware of this, large financial institutions have a habit of doing lots of disclosures and being very upfront about things. And when they put their name on things or make claims, they often like to have them backed by data. This is why financial institutions tend to be very conservative. So, but I mean, obviously, let's talk about the conspiracy theories. The conspiracy theories is that there's some big, like, desire to change the supply of Bitcoin, right? Which would make Bitcoin inflationary, maybe, if the supply was increased. Oh, it's the great like Bitcoin takeover, they say. Okay. And what's your point? I understand your point, but have no idea why you preface it with BTC Maxi. Show me one altcoin that isn't more susceptible to hostile government corporate takeover. I think that, I mean, I think if the Ethereum Classic Ethereum fork taught us anything, it's that you can't get away from the fact that at the end of the day, humans are social creatures. And so it doesn't matter what the code says. It doesn't matter what the law says. Really, at the end of the day, if you get enough consensus, the people are going to be appeased. And so Ethereum Classic was one of those, for some people, line in the sand, principled position. And, you know, they didn't win the battle. Ethereum Classic did not win the battle. And so obviously the people on the pro ETH chain, on the pro ETH argument of the situation, are going to probably say something about, you know, rightness, you know, like it was right to return the hacked coins to individuals. And the other thing is that on the other side of this, literally just 2 days ago, we were having the quantum computing disaster scare, like, oh, like December 10th, like, oh, it's Google's new Willow AI, or, you know, quantum computing that is now making the market, you know, flash crash, right? That was the narrative on December 10th. That was the narrative. And you literally had all like Bitcoin devs like Adam Back out here making posts like, well, like if there ever was a quantum hack, you know, we would just roll the chain back to the date of the hack, you know, set everything as a balance, and then hard fork the whole chain over to the quantum resistant code. And everybody was like, oh, okay, yeah, sure, that makes sense, right? Like you would actually use technology to like safeguard everybody's investments and financial well-being. Not, well, you know, like one bad actor like figured out how to crack the code and fucked everybody. So, you know, but he did it legally. So nah, I don't get down with all that, man. Yeah, I mean, I agree. I mean, a lot of people coming in are normies, don't remember Ethereum Classic. Yeah, nothing would be safe. Well, that's not necessarily true. There's already quantum encryption. There's already quantum resistant encryption standards, and they're already used in a lot of things. So it's just that the current core code is not, and then the elliptical curve cryptography even slightly a little bit different for the public-private key pairing. Okay, I get reposted, but then whoa, can I edit it? Yeah. I don't think I can edit it, can I? No. People far reeking. People far reeking. Well, guys, you know what that means. We got the spotlight going. It's the emergency lights. All right, that's the signal. Ladies and gentlemen, that is the end of our show today, as the dim spotlight is signaling the end of the world of Bitcoin, perhaps existence as we know it. Overall, ladies and gentlemen, I think we're at a very interesting inflection point where we do have very overextended conditions on most time frames. We should see some form of recovery bounce from here over the next 4 to 8 hours. Whether or not this marks the local bottom and the actual beginning of a fresh push to a new all-time high for Bitcoin, as it has been every single other time we've come down here, or the beginnings of, yes, indeed, perhaps a deeper correction, remains to be seen. All right. What I think is more assured that in the long run, I think we will continue on with our bullish push, following a correction, however it may be, just as we've seen in many, many other bull markets before us. But otherwise, again, one thing does not change. Bitcoin continues to push on. Bitcoin continues to revolutionize money. And here's the nice bright side to everything, right? If you round tripped your holdings from 2020, 2021, all right, on Bitcoin anyways, you're up bigly, okay? Almost altcoins, not so much. So remember, for the long term, Bitcoin above all, everything else is super speculative. Be willing to part with it quickly, okay? Don't get married to the idea of anything that necessarily has to happen. Look at the chart in front of you. Follow the chart in front of you. Follow the rules of your strategy. And if you don't have a strategy, you should probably start there first rather than blind speculation. All right, because that's going to tell you when your ideas are wrong. And sometimes you're just wrong, and you have to accept that you're wrong, and you have to adapt to what's happening right in front of your eyes and not deny it. Which is why I love my strategy so much. But anyways, ladies and gentlemen, we will be back tomorrow. And a little bit of a housekeeping announcement. I have been trying to do this show every morning at like from 10 a.m. to noon, and we've never really been able to start on time. I just have really too many things to do in the morning to be able to make that consistent. And I know that if this show is going to grow, which it already is, I need to be here at the same time every single day so that you guys can get used to the slot and schedule. And I think that I would like to return the show. I've made the decision, excuse me, use a little bit more confident words. I've made the decision to return the show to our original, previously always happened at this time slot, all right, of noon to 2. So we are going to do that starting basically from tomorrow until the end of March. We're going to commit to that. The only minor change that we might make there, depending on how things go, is we might do it from 1 to 3 instead, if that works out better. So we'll do some A and B testing with the time slots, but we are going to be moving from the morning, which, to be honest with you guys, is just a little too competitive. There's too many other bigger content creators in the morning for me to be able to really get any competition through the rise of the ranks. There's too many kingmaker slots is what it's called in the streaming business, in the morning avenues. So the afternoon, a little bit more open. I think we have better growth potential there. And just going back historically, that was the time that we always stream. So that's where we're going to be going. So tomorrow we will be going live at noon. I will be posting that. That way I can be on time every single day because that's reasonable. I'm always feeling rushed to like get my report out and do my trades and manage my portfolio. And then it's like, oh, we got to come to the stream. And I just kind of shoot from the hip a lot all the time. And I'd like to have a little bit, like at least an hour or two to put together thoughts, write a script, maybe even come up with some sketches like we used to do back in the day. All right. So I appreciate your guys' support. Of course, we do this show every single weekday. Our goal here is to educate traders on how to approach the markets with strategy, analysis, and precision instead of blind faith, no strategy. That has been our dedication. That's been our mission since 2018, since we've been doing cracking cryptocurrency. And actually, our channel is even older than that. Our channel is 7 years old as of 2 days ago. So if you want to support what we're doing, which you can come here and watch us, enjoy, get signals, advice, analysis, strategy work, pine code for free every single day, please like the video. It helps out more than you could possibly imagine. And subscribe, hit that notification bell so you don't miss an episode. You can follow our live shows every weekday on YouTube, Rumble, the free speech alternative to YouTube, and X. And of course, you can comment over here on YouTube or Rumble. Join our Discord. It's completely free. Great stuff in there. Link in the description. We are having our 2024 Christmas season trading competition still until December 27th. So still time to get in there and get some rewards. That's the second link in the description over on BYDFi. And if you like what you see, if you like the strategies, if you want to learn to trade with a strategy, how to build your own strategy from the ground up, even if you have zero experience with coding, zero experience of building a strategy or statistics in the first place, that is what our Crypto Trading Academy is for. You can join and trade directly with me and our team at crackingcryptocurrency.com, and that's that first link in the description. Otherwise, thank you guys so much. I'm very humbled and blessed. Early Merry Christmas to all of you, and we will be back tomorrow at noon. Cheers, guys. Trade safely.